The Life Insurance Guide. Buy with an eye towards flexibility. Why? Because through life insurance, support comes so that you won't leave the ones you love dearly with financial burdens. Life insurance plays key roles in covering final expenses, in covering financial risks, in giving you a greater peace of mind, in preparing you for emergencies, and in protecting your legacy. No person wants to acknowledge that they can die prematurely. Should a disaster strike, the idea of not being a policyholder would be overwhelming for people with no other ways of provision after losing all assets. Plan now so that you are covered later. Why now? Why not now, I say? The younger you are, the cheaper or more affordable life insurance is. This is because the odds or risk of your dying at an earlier age is statistically lower, but that risk increases exponentially as you grow older, as does the cost. Unfortunately, for many, they may not realize or fully appreciate the need for life insurance until later in life when they are older and their mortality becomes more apparent when they have debt. The now factor has everything to do with establishing the needs and the projected needs of the individual. I believe the name life insurance is in some ways is a throwback to the ones we love, to the ones who survive us, who live on, whose lives benefit from such a policy. The truth is, life insurance is ultimately sold on love, because if you didn't or don't love anyone or care about what predicament others might be left in the event that you died, then there would be no need, no demand for life insurance. So in a way, you might even call it love insurance, because it's sold in order to provide extra security for the ones who we love. Common terms of term life insurance are 10, 20, and 30 years, although some providers may offer some additional options. Pretty uniformly in the industry, you'll find them in the 10-year increment and probably no longer than 30 years. One of the great benefits of term insurance is its affordability, monthly or annual payments being actually drastically cheaper in comparison to permanent for the same dollar amount of death benefit or coverage. Though the drawback here is in the name itself, the term, because all terms end, and if the coverage is still needed after that, then the cost to buy insurance again will be at the new or older attained age of the policyholder at the time. Whole life insurance is a fixed premium, meaning that after picking a payment, your rate plan will never change. It's a fixed rate premium. Also, whole life insurance features access to cash value, which is money that you can borrow from accrued premiums you've already paid in. This is probably the most popular, with its fixed rates and guaranteed minimum cash value and death benefits. Relatively, it is more expensive than term insurance because the odds of the insurance company having to pay out are certain, but in the long run, as an individual gets older, permanent life insurance ends up being a lot more effective than had they purchased multiple term policies over the course of their entire life. Some might see a permanent policy as having more equity than a term. Life insurance only gets more expensive as you get older. How much can you afford? Secure paying off the cost of college, university, or career training for your children in the future in case you're not around to see them through it yourself. Pay off your funeral or burial costs, pay off home mortgages, pay off the car, pay off all outstanding debts and loans. You should pay only what you can afford, and within that threshold, find the options that best meet your needs. As long as you don't lie about your death or anything on the contract, really, and as long as you pay, aka hold up your end of the bargain, then it's a legally bound contract, guaranteed to pay per the specifics fine print of said contract.